What if I told you you could invest in real estate without even applying for a mortgage? Welcome to Get Started Investing, a podcast where we help you make the most of your money. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
Oh, I'm very good, Bryce. Very excited for this episode. I'm very intrigued by your question.
Yeah.
Property is the great Australian dream.
It is.
I mean, honestly, wherever you're watching this or listening to this, the great American dream, the great British dream. I'm sure most countries dream of just owning a house.
Yes.
But that dream feels more and more out of reach for young people. So the idea of buying a property without a mortgage is certainly intriguing.
Yes, Ren, that introduces the concept of a REIT, a real estate investment trust, something that we're going to be unpacking today and inspired by a question that has come in from Stuart.
Hey guys, my question's rather timely, particularly given the state of both the Australian property market over the last 12 months, especially here in Perth, but also the stock market at the moment with all things tariffs that are going on. So I'm a big fan of both share market investing and also purchasing real estate. However, is it possible to bypass investing in physical real estate, and that's whether it be commercial or residential, and instead just invest directly into a REIT or an ETF-based REIT and still get comparable returns? As always, keep up the good work, guys. Thanks very much.
Thank you, Stuart. We'll endeavour to always keep up the good work. We love the support and I love you leaving a message. If you would like to leave us a voice note, just like Stuart did, there'll be a link in the show note or descriptions below. But Ren, in today's episode, we will explain what are REITs and how to invest in them. We're then going to compare their performance versus buying physical property, and then we'll list out some of the most popular products and REITs listed on the ASX if you want to get stuck in.
Yeah, now before we do, we should say a massive thank you to our long-term partner here on Get Started Investing, and that is Betashares.
That's it, Ren. Do you know how often and how much you are paying brokerage every year?
I do, but that's because I'm a finance nerd that hosts a finance podcast.
That's true. Well, we all know that minimizing costs helps to maximize your investment returns, and that's why we are happy to have our new long-term partner of the show, Betashares Direct, where you can invest brokerage-free in all ETFs, not just Betashares ETFs, as well as 300 plus shares traded on the ASX.
And the best part is that zero brokerage is Betashares Direct's long-term commitment to investors.
Epic.
So go to betashares.com.au/direct to sign up.
Betashares Capital Limited is the issuer of Betashares Direct. You should read the PDS and TMD available at betashares.com.au and consider whether the product is right for you. Investing involves risk. Refer to the PDS for info on other fees and costs.
All right, well, let's get into it. Real estate investment trusts, or REITs, you'll hear them called. I think we'll just call them REITs for the rest of this episode. They're an alternative path to property ownership.
Yeah.
And what they are is essentially they're companies that own real estate. So they're listed on the stock market like any other company, Commonwealth Bank, CSL, BHP. You will also see a whole list of real estate investment trusts. They have stock tickers. Their share prices go up and down each day. But rather than companies doing whatever companies do, they are set up purely to own and invest in real estate.
Yeah, pretty straightforward. The way you make money from these is twofold. The value of the real estate goes up and also, or down, you can lose money.
In Australia, mainly up.
Mainly up. The value of the underlying real estate portfolio changes over time, and you also get rental income from these investment properties. And of course, that is then ideally reflected through the share price of these real estate investment trusts.
Yeah, and the great thing is because they're listed on the share market, you can buy and sell them like a share. When the share market is open, there's daily liquidity. So you can pull your money out at any time, unlike a house, but also you can invest with a lot smaller amounts of money. And as Bryce teased in the intro, you can do it all without a mortgage.
Yes.
And that's important because these numbers are out of Australia, but I think this reflects a pretty universal experience. Property's never felt more out of reach.
No.
In the past 2 decades, our Australian house prices have grown so much faster than wages. In the early 2000s, the median house price was around 4 times the average income. Now it's more like 8 times. In capital cities, you can get into double digits. In Sydney, I think it's now, like 12 or 13 times. Property has got more out of reach.
So then I guess we've got to know, how do we actually invest in these REITs? And the good news, Ren, is it is so simple. It is through the stock market, just like buying any other share. They have a stock ticker, they have a name, and you can buy it through your brokerage. So, for example, there's the National Storage REIT. The ASX ticker is NSR. We'll unpack that a little bit further in this episode. But you can also buy ETFs that have multiple REITs within them. A popular one, and one that I actually used to own, was the Vanguard Australian Property ETF. The ASX ticker is VAP. The underlying construction of that is many different REITs that make up that ETF. Just like if you don't want to go out and pick individual stocks, you don't want to have to choose individual REITs, there are ETFs that wrap it all up for you and you can get a broader exposure.
So, what can we invest in with REITs? The good news is almost everything.
Vaucluse property.
The bad news is that almost excludes what most people want to invest in. So let's start with what you can invest in. Almost all of the commercial types of real estate. You can invest in office towers, you can invest in logistics warehouses, you can invest in hospitals and healthcare centers, data centers, retail and shopping centers. All of the commercial real estate, there are REITs listed in Australia that allow you to become an investor in those types of property.
Yeah.
The one type of property I didn't mention there, though, was residential.
Yes. Unfortunately, there is not a nice ETF or REIT that is available that's going to give you eastern suburbs Sydney, or that's going to give you Perth, or that's going to give you some of the hot up-and-coming suburbs in Australia. But that's okay, Ren. I should say that, people might think, commercial boring. Let me tell you that we've had some pretty interesting interviews on Equity Mates over the past little while, and there are spots within commercial real estate that are hot. We talk about data centers, we talk about warehousing. There is incredible opportunity in commercial real estate.
I think all the same drivers of residential real estate are drivers of commercial real estate as well, because, for all of the supply shortages of housing and all the the high levels of population growth that Australia is experiencing, and the supply demand imbalance that's led to. For every set of housing, you need a set of residential, you need to build other infrastructure, hospital infrastructure, all of that stuff to accommodate new population. And so you see similar supply demand dynamics play out in a lot of these sectors of the commercial real estate as well, just because it is a supply and demand game.
Yeah. Yeah.
So if you're wondering why there aren't any residential REITs, my theory is there's a lot of tax benefits to personally owning residential, and so there's not enough investor demand for these REIT-style residential.
Yeah. So that's the high-level summary on what REITs are. If you want to dive a little bit deeper and get some more information, we do have a free downloadable guide on all things REITs. So you can find a link to that in the show notes or description below. Download it as you're listening, and you'll know everything that you need to know about REITs by the end of this episode. But Ren, let's have a look at comparing REITs through the stock market, through the ASX or whatever exchange, versus direct property, because there are obviously some considerable differences.
So I'll name the category. You tell me how they compare.
Okay.
A REIT versus direct property.
Yeah.
So I guess the starting point is, what's the sticker price? How much money does it cost?
So for a REIT, a minimum of $100 through some exchanges.
You could probably get it less than $100. Our long-term partner, Betashares Direct, you can buy REITs for less than $100.
Yeah, that's good.
Well, I'm just correcting your numbers.
Yeah, that's true. That's true. Whereas direct property, if you're investing directly, you're going to need upwards of 100,000 easily.
Yeah, well,
I mean, a supermarket these days is 14 million bucks.
True. Well, I was actually thinking direct property meant the choice of buying a REIT or investing in a residential.
A residential, yeah.
Yeah,
But I
yeah.
mean, if you're going really comparing apples to apples and you want to go commercial,
Okay.
some of these big bad boys,
fair.
yeah.
All right. Well, so that's the sticker price. What about the ongoing costs?
So ongoing cost of a REIT, you buying it through the ASX is nothing. But for a direct property, you've obviously got mortgage repayments.
Yeah, and people might be thinking, oh no, but you got to pay fees on a REIT. What we mean there is you don't have to tip any more money in.
Yes.
Yeah.
Yeah.
So let's then turn to fees. How do the fees compare?
Look, there's a fund management fee for the REITs, as you mentioned. But for direct property, you need to consider things like property management, maintenance costs. There's a lot of those costs that you don't necessarily consider when you're buying in that pop up and surprise you.
What about how often does the price move for these investments?
REITs, daily price movements on the ASX or whatever exchange that you are investing through. For property direct, though, the price changes whenever you go to sell.
Yeah. Or whenever a real estate agent knocks on your door and
tells
says,
you,
have you
yes.
considered selling? How easy is it to diversify?
With REITs, it's very easy because of all the reasons we've spoke about, ease of buying, low cost, you can get access to many different opportunities very easy and very quickly. If you're trying to diversify direct property portfolio, incredibly difficult. You need a shitload of money.
Yeah. How about liquidity? How easily can I take my money out?
I can buy and sell REITs daily. There's a huge amount of liquidity in a lot of the big ones here in Australia, whereas with direct property, I need to find someone out there who's going to buy my property. It's a lot harder. I can't just decide instantly, I'm going to sell this today.
Yeah. Okay, I'm pretty lazy. I like my investments to do the work and me not to have to.
Yeah.
What about ease of management?
Good news, Ren. REITs is right up your alley. You can buy and take a pretty hands-off approach because the manager of that REIT is going to do all the hard work for you. They're going to manage the property portfolio, whereas if you're buying property direct, you need a pretty hands-on approach if you're not wanting to pay for a property manager. I wouldn't say it's for the lazy.
Okay, and then my final question, how do I get paid?
Very similar for both, to be honest, but you're going to get a dividend payment through REITs as well as capital appreciation from the share price. And in direct property, you're going to get rental income and also capital appreciation from the property itself. So in that way, they do compare quite well.
So Bryce, there's some of the key categories, but I don't think we've answered Stuart's key question, which is about the returns that he can get. Are they similar to getting what he can get in a REIT from investing in physical property? Now, let's assume that Stuart isn't a multi-millionaire and he's talking about buying a shopping centre.
Yes.
He's talking about saving for his first home and buying something there. So, Australian residential property, this one of Stuart's two choices, does 7% a year over the long term?
Yes, makes sense.
So... having a look at some of these REITs, I've had a look at Charter Hall. Over the past 10 years, it's returned 13% on average for the last 10 years.
Okay.
And then Goodman Group, which has been a star performer, although it has fallen recently, 16% a year over the last 10 years.
So more than comparable.
So the returns are there if you pick the right REIT.
Ren, there are plenty listed on the Australian Stock Exchange, some that have been doing incredibly well. You mentioned there some of the returns over the last decade have been pretty solid. So let's go through some of the big ones. The first is one called Centre Group. The stock ticker is SCG. It's focused on the retail category. It has things like Westfield shopping centres across Australia and New Zealand. It's a big hitter.
Yeah, well, when that French company bought Westfield globally, they didn't want the Australian assets, so that's what this company is. Yeah. We'll just rip through a few quickly because I think this list is by no means comprehensive. There's so many REITs, but we just want to give you a sense that there's a heap out there. So Dexus is one that's quite known for its office buildings, particularly in Sydney and Melbourne. Offices obviously haven't done too well recently. Yeah. Charter Hall Long WALE REIT. This is a diversified REIT. It owns warehouses, offices, healthcare, but it's really focused on long-term blue chip clients. And that's what WALE means, weighted average lease expiry.
Yes. Another big one is Goodman Group. They are involved in industrial and logistics and of recent times really gone hard on warehouses and a focus on building infrastructure for data centers.
Yeah.
Then there's National Storage REIT, NSR is the ticker. It's in the name. They focus on self-storage facilities across Australia and New Zealand.
I think one more to add just to give you a sense of what's out there. Arena REIT, ARF. They focus on social infrastructure, but things like childcare centres in particular, education centres, some healthcare. I think we've touched all categories there. Just, we've touched industrial and logistics, office, shopping centres and retail, social infrastructure, just to give you a sense of the choices that you have as an investor. But for each of those categories, there's heaps of different options.
Yeah. Now, we spoke about ETFs. So there are three popular ones here in Australia. The Vanguard Australian Property ETF, the ticker is VAP. It tracks top ASX listed REITs that we mentioned above.
Now, when we were talking about returns, I just had a look at Vanguard Australian Properties returns. Over 14 and a bit years, it's returned about 75%. Which works out to be about 4% compound annual growth rate. So I'd say that's a little bit behind Australian residential property, But obviously the COVID slowdown in offices
Yeah,
would have
definitely.
obviously dragged those returns more recently.
Definitely.
Yeah.
Then there's the SPDR ASX 200 A REIT. It's SLF is the ticker. It covers, again, Australian REITs. And then the iShares Global REIT. The ticker is REIT. They did well to get that. It invests in REITs globally, including US, UK, and Singapore, if you're looking for a bit of global diversification outside of Australia.
Yeah. So as we wrap this episode up, I think the great news is you can invest in property without a mortgage, and there's a heap of choice available for you on the stock market. You can't, unfortunately, invest in residential real estate, at least until the Equity Mates Vaucluse Mansion REIT spins out. But most of the commercial property sectors are available for you. You can choose a particular sector or a particular manager in a sector, or if you just want exposure to Australian commercial property as a whole, there are a couple of ETFs there for you. And if you want exposure to global property, there are ETFs available for you there.
Nice. Well, thank you so much for the questions, Stuart. We love hearing from you. Please leave us a voicemail, or you can hit us up at equitymates.com/contact if you want to email us a question. A reminder that all of our Get Started Investing content is now on a separate YouTube channel. Everything is over there. If you just want to engage just in the Get Started Investing content, there'll be a link in the show notes for you there. If you're watching on YouTube, please rate and leave us a comment, like, subscribe, all that jazz. And a reminder that this episode has a downloadable free resource for you so that you can go deeper on all things REITs. Again, a link will be in the comments for that. But Ren, that leaves us with nothing else to talk about, so we'll pick it up next week.
We'll have a think about something else to bring you, and we'll be back next week.